The financial markets have been on a tear in recent weeks, topped by an above 15,000 point close for the blue chip Dow Jones Industrial Average this week. What's making the markets move? What may be right around the corner? I'm joined by Bob Williams, Senior Vice President and Managing Director at Delta Trust Investments. Welcome back to the program. Good to be with you.
Thanks, Roby. Nice to be here.
You guys have been a little busy lately. You've had really maybe had to buckle up like you're on a big roller coaster ride that just keeps going up, 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 really, really fast.
Well, the rides up are always a lot more fun than the rides down. It has been an exciting time, and it's been a great time. Our investors are pleased. Most of us are long in the market and enjoying this ride up.
Let's talk about what is making the markets move right now. When you look at earnings reports, they've been basically very favorable overall. When you look at the monetary policy established by the Federal Reserve Bank, that too has been very steady for a long period of time. Speak to those two particular issues in terms of how that's fueling some of this growth.
Well, thus far in the quarter, nearly 450 of the 500 companies in the S&P 500 have released earnings results. 2 out of 3 of those are beating earnings per share results, so that's a very pleasant and good surprise. The markets are reacting favorably to that. The converse side of that is that we're seeing that a lot of those companies, nearly 50%, are missing their revenue estimates. And that's indicative of cost cutting on the corporate level, and that 50% missing revenue estimates is compared to about 30% historically. So it's something notable to pay attention to.
Why is missing the revenue estimates, why is that not hurting things necessarily?
Well, because they're able to cut costs by more than that. So you see earnings per share going upward while revenues are coming down on a historical basis, and so it is a little bit of a concern of the softening economy.
Ben Bernanke, the Federal Reserve Bank chairman, spoke on Friday afternoon, talked about there's still this shadow bank environment out there, but he also did not give very many clues of what may or may not happen with monetary policy, which is probably an indication of what?
Well, I think right now they're still sitting back and just watching things. There are a couple of things to be concerned about. Inflation has come in lower than the Fed had been targeting. So that, they need a little bit more economic stimulus, and that's hard to do. At some point, you begin to push on a slack rope, effectively trying to lower interest rates lower than the effective 0% that they're at now. So he's working on watching the banking industry, watching those banks that are stretching too hard to get yield in this environment, and that's going to certainly be a concern. The other concern is, the failure of another investment bank and what that would do to the financial industry, and also a concern that perhaps there could be, in a really bad environment, a run on money market funds, which could be disastrous.
Let's talk about something that you and I have had some discussion about, but I want to hear more about it. Basically, you don't see money managers as influential in the financial markets as they used to be. Tell me what's trending in that respect and why that may be fueling some of this run as well.
Well, I'm always hesitant to say things have changed, but when you look back historically, 20 years ago, you had the defined benefit plans, retirement plans, which were the pension plans. Today, you have the defined contribution plans, the 401k plans that are being funded by individuals. And the difference is that the pension plan monies were controlled by money managers that tended to try and outperform the market, and they tended to move large sums of money in and out of the markets frequently, and that exacerbated the volatility and the ups and downs of the market. Now you have individuals who at most once a year set their allocation for their retirement plan money, and maybe every 5 to 10 years actually move that money around and change how it's invested. So it's effectively regular money that goes into the markets week in and week out, and it's buying. And the markets are a supply and demand situation, and if you have more buyers than sellers, it's going to go higher.
Is some of that trend that you're describing with a little bit more individuals taking control of their investment decisions, is that just because the technology has become so much easier for people to do that?
It's the technology, but it's also a result of corporate cost cutting that's led to the end of the pension plans and led individuals to be forced to fund their own retirement plan and manage it themselves. So it's a combination of the two factors together.
I don't have a crystal ball on the desk here, but I always like to ask you to look into your hypothetical crystal ball here. What do you see happening over the next, I don't know, say 3 months or so? Does this run continue? Does it maybe pull back? We always kind of look for a correction from time to time. What do you see happening?
Well, it's interesting because, again, because of the regular money flowing into the market, I think that if there is a sell-off, that's really more likely to be leveled out by the continued buying that comes into the markets. When you look back at the futures market right now, there are substantially less short sellers or speculative people betting that the market's going to drop than there have been historically, despite some pullbacks and increases that some people are betting the market's going to pull back. So if I had to make a guess, I'd say we're more likely to see some consolidation, but no signs that there's going to be a tremendous mass sell-off in the market over the foreseeable future.
You and your colleagues at Delta Trust Investments spend a lot of time holding clients' hands and making them feel good about what the decisions that they've made. So what's the advice that you're counseling right now, to just in general, to some of your clients?
Well, we try and set long-term investment plans in place, and so hopefully, we're really trying to tell people stick with the plan. It's been working particularly well for us right now, and there may be pullbacks, there'll always be setbacks, but we're planning for in the most case 5 to 20 years out for folks, and no reason to deviate from the plan as it's set right now.
All right, he's Bob Williams. He's the Senior Vice President, Managing Director at Delta Trust Investments. As always, great insight. Good to be with you.
Thanks, Roby. Thank you.